Hi everyone, Andrew, Michael, Dornbusch Partners, good morning. Another interesting time in the market, Michael. We were just checking before, market down 31 after being off 190 over the last week, bounced back a smidge earlier, but what is going on at the moment? This Santa Claus rally, there ain't much ho-ho-hoing going on.
Santa's gone MIA just for the time being. It's, oh, you're dead right, this week's been extraordinary, hasn't it? Monday down 100, Tuesday back up 70, Wednesday, Thursday reasonably positive, and yeah, copping another bit of a haircut today, so yeah, not
for those of us who are follically challenged.
Yes, that's right. Either losing it or greying. It, yeah, it's not for the faint-hearted out there at the moment. That's for sure. No. So no, I haven't seen this sort of level of volatility, sort of this time of the year. Because yeah, as you say, you know, the Santa rally, we sort of tend to be reasonably in a bit more of a positive mood around this time of year. But no, at the moment, yeah, a lot of uncertainty, a lot of up and down, and yeah, it's a tough place to be.
Do you think it was because of those GDP numbers that we saw earlier in the week, where in essence we only grew by half? But you'd also think then, you know, they're talking about lower interest rates. Surely that would be a positive. It's
a very interesting time in that regard, isn't it? We've had a wave of economic data this week, some good, mostly bad. But you're right, low interest rates, low oil prices. Now we're sort of should be starting to see that flow through. So it's a real juxtaposition, for want of a better way to put it. Because again, you know, low interest rates, again, assuming low petrol prices in the coming weeks or so, should be more than enough incentive for people to get out and spend a few dollars. But yeah, GDP figures were certainly disappointing. Of course, the expectations were pretty high. You know, 0.7 was the expected growth, which was the largest sort of quarter growth that you know had been expected for a while. But yeah, we certainly came in well under that. You know, trade deficit figures, we're a little bit better, but you know we're still running that consistent deficit. But yeah, no, it is. It's a lot of mixed information, but yeah, certainly still pointing that yeah we're slowly slowing down. That's for sure.
Anything that you've been buying with all this volatility going on at the moment?
Yeah, for me, Andrew, I'm still sticking to the quality stuff, sticking to the knitting, so to speak. I think you know there's certainly some fantastic bargains in the resources sector. I just wouldn't be going there just for the time being. You know, maybe the big guys, BHP, Rio Tinto. BHP is probably still the pick for me in the resources sector. But I know we've spoken about it before. Woolworths, you'd have to think is still well worth throwing a few bob into whilst it's in that low $30 range.
It's put on about $1 since you and Dan were talking about it last week, but it's still recovering. From my point of view, putting on the brave suit, Santos, you know, 10-year lows. They just had that failed $700 million hybrid issuance, or lack of issuance in Europe. People are really worried that they're going to go out and sort of raise more capital, but they are a prime takeover target. Total from France or someone like that, they're well and truly in the gun sights. So, as I said, you need to sort of have your brave pills, but at 878 or 880 or wherever they are at the moment, I mean, they're looking quite compelling.
Absolutely, I'd agree. It's one that we've been sort of following, and again, probably more the risk-averse clients have, you know, probably steered away from. But yeah, these sorts of prices, you'd have to think it's well worth a stab.
Anything on the sell side? I have to be honest with you, in this type of market with all the selling going on, I've just been pulling right back. I don't think it's really a selling type of market at all.
I'd agree. I think again, if you're very risk averse, you might be sort of taking a bit of money off the table, because yeah, looking like we're probably in for a few more hectic sort of weeks ahead. Again, probably for me, and again we touched on it a little while ago, the media sector for mine is still on the nose. So yeah, I'm certainly reducing some of those media holdings.
Sure. So I think in summary, ladies and gentlemen, mums and dads, boys and girls, hold on tight because there's a bit of a scary ride going on at the moment. Till next week, thank you.
Bye now.